Good night, everyone. Thank you so much for joining us tonight for our workshop on inventory management. I am Tanis, and I am from JMMB's SME Resource Center. I hope everyone is doing fabulous tonight. How are we all feeling?
Great.
Okay, we are going to start the night with a word of prayer, and we're going to ask Vincent to lead us through prayer. Vincent, you can go ahead.
Hello. Okay, good night, everyone. Almighty Father, we just want to give you thanks and praise for bringing us together tonight on this forum. Lord, we thank you especially for life and the many other blessings you have bestowed upon us. Lord, we pray that the information we receive tonight will be useful and beneficial to all, especially our business owners on this forum. This we pray in the mighty name of Jesus Christ, our Lord. Amen.
Amen.
Thank you so much, Vincent. We are now going to ask Paula to share a section of our Vision of Love document. The Vision of Love is a document that JMMB created when we were initially formed which speaks to our core values. So it speaks to the values that JMMB holds very dear. It speaks to how we treat our clients and how we treat our team members. So we are going to share a small section, and if it is that you are interested in seeing what the entire document consists of, it is on our website, www.jmmb.com. Paula, you can go ahead.
Good night, ladies and gentlemen. The JMMB team is clear that the organization is based on unconditional love and mutual respect. This love is expressed in ongoing day-to-day working relationships and performance. Unconditional love is expressed in every interaction and is the foundation upon which the organization rests. Love motivates the JMMB team to serve our clients who are a very special part of our family.
Thank you so much, Paula. So remember, if it is that you would like to read the entire Vision of Love, please feel free to go to our website. So before we get into the main course, I would just like to share a few information that will make our session a little bit more interactive and fun. First of all, I would love to ask everyone who is comfortable to please turn on your video so that we can see who we're speaking to, meet new persons in the region, because tonight's meeting is actually a regional meeting. We have members from Trinidad as well as from Jamaica joining us tonight. So let's use the opportunity to network and meet some new business partners. Additionally, if it is that you would love to share your information, a networking opportunity, a business opportunity, please feel free to put your information in our chat section. That's the window. If you look at the bottom of your screen, you'll see some buttons. One of them is a chat button. It allows you to speak. You can speak to each other. You can speak to us. So please share your information there. We have an SME directory that is sent out at the end of each session with a review material. So we'll send out your information there. Also, if it is that you have any questions, please feel free to use your microphones, or if you would like, you can type it in the chat session and one of us will represent you. So it's now time to meet the team as well as our other clients who are here with us tonight. I'm going to ask Natalia, who is our SME Resource Center in Trinidad, to make the introductions.
Hi, good night, everyone. My name is Natalia Ramatula, and like Denise said, I am the SME Resource Center Officer here in Trinidad and Tobago. And I'm here just to give you guys a little intro to the rest of the team and get to know you guys a little bit better. As you know, or you may have heard from our excerpt of the Vision of Love. You know, at JMMB, we are a very family-oriented company, and we really like to form those relationships with our clients as well as our team members. So just to let you know who is joining us, and on the team tonight, we have Mr. Vincent Auld, who is our Senior SME Resource Center Officer, and he's in Jamaica. We have Ms. Paula Forrest, who is also one of our SME Resource Center officers in Jamaica. And we have Denise, who you would have heard from, who's our host tonight. She is one of our SME Resource Center officers in Jamaica as well. And you'll get to meet Kendall Robley later on this evening. He's actually our facilitator. Denise will give you a little bit more background on him just before he gives his presentation. But that's it for our team. And what I would like to do right now is just open up the floor and invite you guys to introduce yourself. Tell us a little bit more about your company, what you do. And like Denise said, this is the opportunity to make those relationships and gain new business partners. So I'm gonna open up the floor, and feel free, anyone who would love to share, the floor is yours. So who would like to go first?
Good night. Jano Bishop.
Hi, Mr. Bishop.
From JPLB Industrial Engineering and Consultancy Limited. My company, I have two companies, one in the gas sector, gas and oil, and one in the tourist guest house business.
Okay, great. Well, I hope you enjoy this evening's session, and I hope you find it very interactive and you get some good info from it. So thanks for sharing.
Thank you.
Thanks.
Good afternoon. My name is Charmian Christie, and my company, which is owned by Lloyd and Charmian Christie, is named Power Plus Hardware. We do a range of hardware supplies, construction items. For example, sandstone, cement, blocks. But we also engage in electrical supplies and plumbing supplies. Yeah, that's about it. And we are located in Jamaica, Mount Salem in Montego Bay, St. James. Thank you.
All right, thanks so much for sharing.
Welcome, Miss Christie.
And guys, feel free to leave your email, your contact numbers where you're located in the chat, so that we could build out that SME directory that Denise was speaking about a little bit earlier. Yeah. So would anyone else like to go? We'll take maybe one or two more before we go on, if anyone is willing. We must have one more.
Yes.
Hi, good night.
Hi, good night.
Hi, this is Michelle Seafood Thompson from Trinidad.
Hi,
Hi,
Michelle.
Michelle.
Hi, right. So a little about me. I work at the Ministry of Finance in Trinidad, right? Specifically the Treasury Division. Yeah, so it's just a little refresher for me.
Right.
Tonight.
Great. Well, thanks for coming on.
Okay, thank you.
All right.
Hi, good night, everyone.
Hi, Emma.
Hi, how are you? Hi, everyone. I'm Emma Subrati from Hemalux Limited, located in Kingston, Jamaica. We are manufacturers of aloe vera gel for the skin. You can use it on kids. It doesn't contain any alcohol. And Trinidad is actually ready for our product. So yay, we're ready for export. And we also do hand sanitizer. This is 100 ml travel size, so it is TSA approved, and this contains 70% alcohol.
Nice. Thanks for sharing.
Good
And if you
evening,
want to find
everyone.
out more, you can actually go on our Instagram page, which is Hemalux, and we can continue communication there.
Great, thank you. And I look forward to seeing your products in Trinidad and Tobago. We can't forget
Yes.
Tobago.
That's correct.
Thank you.
Thanks.
Good evening, everyone. Sorry, I'm not showing my face. My name is Monique Davis. I'm here with my husband, Cleon Davis, and we operate a pest control business. We supply services to residential and commercial, and we can be we are on Instagram, Rimo Pest Control, and that is our website as well, rimopestcontrol.com. And we're looking forward to the information that will be shared this evening. We're in Jamaica, and we're looking forward for the information that will be shared. Thank you.
Great, thank you, Ms. Davis. Thanks for sharing. And I know everybody is really excited to get to know each other, but I would ask that we all just exchange contact info in the chat and keep the conversation going there, right? So Denise, I'm gonna hand back over to you so we could get this evening session started.
Thank you so much, Natalia. Right. So as the invitation said, we are here today to speak about inventory. So at the end of today's session, our objective is that you should be able to understand why, as a business that is inventory-based versus service-based, why we need to ensure that you exercise better management at a company that deals mainly with offering service. Also, we're going to be ensuring that you understand, or we hope that you'll understand the importance of using computerized inventory system, as well as the importance of doing inventory count, or what we like to call here in Jamaica as stock count, as well as the importance of having insurance. But what is inventory? Your inventory can be either a physical product that is being held to be sold, or it can be raw materials that may later be converted into goods and sold. For companies that are inventory based, this is how they make most of their revenue, when either the raw material or the finished product is sold. It is considered current asset because, of course, your inventory is not something that you plan to hold for a long period. Your objective is to sell it as quickly as possible and get your cash and repurchase stock. So at the point where it is inventory, it is actually found on your balance sheet. And then once you have sold the goods and you now have cash, it is represented on your income statement as cost of goods sold. So today we're going to be assisted by Mr. Robley Baines, and he is from Robley Baines Tax and Accounting Services, and they are one of our partners in Trinidad. He is the co-founder of the company, and his name is Kendall Robley. He is also he has an advanced diploma in business administration and is a certified chartered accountant. So you know that you're getting very expert advice tonight. He also holds a practicing license from the Institution of Chartered Accounting of Trinidad and Tobago. Prior to actually starting his firm or co-founding his firm, he worked at several multinational and local conglomerate companies. He has over 20 years of experience in accounting and business development. So once again, you can appreciate the quality of educational experience that you're going to be getting tonight. And his company, Robley Baines Tax and Accounting Service, they assist their clients with tax and internal controls, as well as with process technology change and project management. So I'm now going to hand over to Mr. Baines, who is going to take us through the night, and hopefully we're going to have a very informative and engaging afternoon. So Mr. Baines, over to you.
Pleasant evening, everyone. Thanks for joining us today. I would like to share my screen.
You can go ahead.
Yeah. Okay, thanks for joining us today. Just a brief history of Robley Beans. We, as Denise said early on, we deliver tax and accounting solutions for small and medium-sized companies in IT, accounting, advisory services, and also taxation services. Over the last couple of weeks, we have been going through a series, the JMMB financial series. We would have dealt with financial matters, and in those sessions, we would have more or less dealt with what type of business you should register. We also looked at the business context on a financial framework from three lenses: investing activities, financial activities, and also the operating activities. The other sections we would have dealt with the taxation, which dealt with as put each companies and so on, the type of taxes, when you should file the taxes, key dates of filing, interest and penalties, and we also dealt with the VAT system and so on. Yeah, but today particularly we are going back to a key area which was identified in the first session, which were investing activities as it pertains to assets and also inventory. Today's session we'll deal with zoning with inventory. The other session we'll more or less deal with the fixed asset element. Here, just to set some context for this afternoon presentation, because the inventory systems are more or less complex and more wide. I actually would have taken a case study, which I would have done with a multinational client, and this would be familiar with both Trinidad and also the Jamaican company. This company is called Unicoma Group, which was founded in 2000. Head office in El Salvador. Is currently operated 30 brands and is also located in 26 countries. In Trinidad, particularly, they have 22 branches of the Quartz brand, Lucky Dollar 5, and the optical brand 14. In Jamaica, likewise, there are 26 Quartz branches, 11 Lucky Dollar, and 13 optical brands. Yeah, in Jamaica, Quartz would have been around for 50 years, and in Trinidad about approximately 40 years. Why would I bring those companies into context? Because as you would appreciate, Quartz would have been split in their business processes through the furniture store element and also the service element, which is fundamentally two fundamental different companies, which as you know, the furniture stores will actually sell the customer their products, and the service section would actually service goods and services from their aspects. They have over 2,000 brands, as well as 1,500 staff working under their purview. In terms of the ranges that they normally operate with, they operate at SDAs, which is small and domestic appliances. They also operate a domestic line, fitness line, and also a vision line will actually deal with television and that sort of thing. So more or less, I will during the presentation, I more or less refer to the case study. This case study documents are actually bring zoning, try to explain the inventory matters as it pertains to someone a company who has been successful in inventory management, and also to just say, listen, as small and medium-sized company, even an international company or established brand has already established the quality, the standard, the high internal controls. Yes, small and medium-sized companies can achieve the same sense of achievement by implementing proper procedures and IT services and that sort of thing, IT technology within their business profiles to ensure that they receive the same level of control mechanisms within their companies. So I will start the session today by just going through the team members. My name is Kendall Robley, as Tanilo said, and my business partner, Mr. Michael Beans. Yeah. Tonight, as I mentioned, we will speak about inventory, and we also discuss the classification of inventory, and we'll dive into the inventory management system, and we'll also discuss the financial reporting system. I didn't delve much in this aspect of it due to the technical aspects of things, but we could also ask some comments in the chat, and we will explain some of those matters in great detail later on. Yeah. So the first question I want to ask the team tonight is, what is inventory? As an accountant, naturally, I will give the accounting definition of inventory. The International Accounting Standard, ISA2, define inventory as asset held for sale in ordinary course of your business. Those assets that you actually use to process production for sale, and also it forms part of the material consumed in the production process. This is the accounting system. So what does this mean in detail? Inventory is what is built up in the business. That's what I mentioned before, that you actually buy it and you doesn't sell it immediately. So if you don't sell that inventory immediately, it means that it will sit in your store. It will sit in your store for some time until that actual sale comes. If it's sold immediately, as we know, it will go to the sale. It will affect your cost of sales in your financial system. Yeah, so the term there is immediate. So for example, a pet store would actually buy a pallet of dog food. They from the national flour mills, they will leave it in their warehouse until that item is actually sold. A beauty hair supplier perhaps will buy some products from Alibaba, and they will leave it in their warehouse until the sale complete. They have a IT company and they actually sell online and that sort of thing, or even a restaurant rather. They will buy ingredients from the local market for the long weekend, maybe 3-4 days until the actual sale is done. So all in all, they actually keep the inventory in place before the actual sale happens. Going back to the example I would have brought, Coast Trinidad or Coast Caribbean, as it were, or Jamaica, they actually buy the items. It will be stored in the warehouse. Those items will actually place in a showroom area, which will show the items and so on. They would have a dispatching center whereby the item, when it's sold, it will be dispatched and it moves through the system. The small and domestic products, such as the stove, microwave, that sort of thing, maybe keep from the warehouse, the store itself. But then that system is warehouse. They will have a showroom that they actually show the item, and once that order comes from the showroom, it goes to the warehouse, and the item actually goes up to the store. Let's go that how inventory is measured. Understanding the measurement of inventory is a critical component in inventory management, and the standard actually said inventory is measured by lower cost and net realizable value. What is a cost associated with inventory? It said inventory comprises all the costs that bring the item to the state and the condition, the present state and the condition that is available to be sold, right? And the net realizable value is the realizable amount, the selling price in the ordinary cost of the business at the estimated, and less the estimated cost to take it to the sale. Go back to the cost of the inventory. For example, Coast Trinidad would have buy 10 tables, for example. Each of those tables would have cost $100. And the selling price for those 10 tables would now be, the cost price for those tables would now be $100. They would have shipment costs to bring in those 10 tables, which perhaps would be $500. And you may have some VAT associated with that, maybe $100. So the overall cost for those 10 tables will be $1,600. Yeah, so each table will now cost $160. If we more or less look at the net realizable value concept, that is the market, the selling price. This system, this net realizable value is really used in such an industry such as the precious gem market, where the market prices are readily available and that sort of thing. But for ease of example, showing the difference between the net realizable value and the cost, because the definition said the lower the cost, but the net realizable value, you need to select that price into the inventory system. Yeah, so for example, that's the same 10 tables on the market at that particular time, instead of $1,600 as the cost, it now become $1,700. The market saying that those 10 tables would now be worth $1,700 selling price. We will deduct the transportation cost that we would have said before, 500, and the VAT 100. So now the $600 cost associated with bringing the item to state and condition will be deducted from the market price, and you now get $1,100. So what does that mean? It means that the cost of the item that were identified before was $1,600. The net realizable value now identified as $1,100, right? As an accountant or as a director of a company, you have to now recognize the asset as a lower net realizable value. At this point, the lower of the both costs is now the net realizable value of $1,100. So that $1,100 is what you're going to recognize within your statement of financial position under current assets as your inventory value. Yeah. Most businesses in the relative sense would use the first method, the cost method, and don't do the comparison because the technicality things about it, the market value is not readily available. So more or less you will look at just using the easier option, that things that you can actually measure. The cost price, the shipping cost, you put all those things together, and then you capitalize that within your financial statement. Yeah. So here the market value is really the unknown if the market doesn't give you that information. Yeah. So let's look at the inventory from the both sides of the equation, the service part and versus the operational part. Inventory is broken up into two items: financial inventory and non-financial inventory. What is financial inventory? Financial inventory inventory that is actually held in your balance sheet, that is sold to a client as a product or sold as part of an actual service. Non-financial asset or financial inventory is what is expensed immediately and is purchased and is used to repair or maintain an asset such as an M&S item. Let me bring it back to the example which I would have done earlier on. We would have spoken about Court Store, the furniture store, and we also talk about Service Tech. Service Tech actually is a support structure of the furniture store. The furniture is a financial asset. Those are inventory that is actually whole to be sold, and the Service Tech, once you actually sold the products, once you sold the products and so on to the customers and so on, you may have breakdowns and that sort of thing. But the Service Tech division actually have to buy different spares and so on, maybe a motherboard to fix a computer unit. So they buy a whole heap of those items. Those items are from their perspective is not really an asset, it's really a consumable. So they would expense it immediately, but in their financial records or the management, inventory management system, they will track all the inventory which you would have already expensed in the financial system because you're actually using it on a consumption basis to support the operations. So that's the difference between service to support the other part of the business. That would make the this particular client very good to use as an example. So let's go into inventory management. What's the role of the inventory? We will look at the roles and responsibility of the inventory, and we'll also look at the principle of inventory from four lenses. The management function, as we know and can appreciate, is responsible for the implementation of an effective and efficient internal control system of managing the inventory, whereas logistic and the financial function is responsible for support and implementation and sustaining actions and development the whole of the inventory and management ecosystem. So what that does mean? What does this whole thing means? We may maybe run a small and medium-sized company. There may be limited number of staff, but particularly it should have a series of level of delegation of duties and that sort of thing within the organization. So for example, the same person who is actually buying the product requesting you send the purchase order and so on, receiving the items and so on from the suppliers and so on. You should have a segregation of duties from the one who actually inputting it within the system, inputting it within the inventory system. So that is to ensure that if errors occurs, it could actually it could pick up the errors and so on, and also it could prevent further error from happening if those members don't have a fiduciary duty to the organization. Yeah. So we also so let's go into inventory management. What we know about inventory management? Inventory management is knowing how much of inventory you have, when to order it, and at what price. It also helps keep the storage prices down. Inventory is very expensive. The storage space, it requires security, protection, insurance, tied up in inventory and so on. So you more or less want to ensure you keep the inventory as less as possible, so you carry less inventory and you reduce the risk of having excess inventory, or you reduce the risk of running stock out and so on, having less inventory and that sort of thing. At this point in time, we want 2 points that I brought up before: the inventory, the cost of the inventory, and the insurance cost. Insurance is, as a business owner, you want to ensure that the insurance costs associated with the inventory within your warehouse is covered under the insurance. If you're carrying too much inventory, it means that sometimes it will exceed the threshold of the inventory threshold. For example, if you have a warehouse of 200,000 of goods and of products inside of there, the insurance coverage is 100,000. You want to make sure that the insurance that you currently have and the warehouse value remains the same. You may have a 5 to 10% give or take, but you want to make sure that all the inventory within your warehouse is more or less taken care of within your budgetary allocation for insurance premiums and so on. Yeah. So you want to go. We spoke about the roles and responsibilities before. So we're looking at the 4 lenses. We'll go through the 4 lenses of proper inventory management, or setting up an inventory management process for success. Those 4 lenses will more or less organize and track your inventory processes, minimizing costs and so on, and also audit controls mechanisms. So first we want to go through the auditing and tracking process. Yeah, auditing processes to set up an effective and efficient auditing and processing warehouse. You must have a good layout, labeling process, barcoding process, the inventory ledger, ensuring that you have an effective inventory ledger, your point of sale system, and utilization of a first in, first out methodology, and so on. So first you will go through the layout aspect of things. Yeah. Layout the warehouse directly impact the activities of the warehouse. By properly laying out your warehouse, you minimize the wastage, you minimize the errors and confusion and separation of the warehouse, the potential for injury or economic system, and to also maximize the space and so on. The layout of the warehouse is not limited to the physical space or the equipment and that sort of thing. So more or less, if you will check my diagram on the side here, if you have an effective layout of your warehouse, you want to make sure that it's easy for you to actually pull in the items on the warehouse straight versus going all over the warehouse trying to pull items on the warehouse. So you want to make sure that it's less confusion, and you put the most frequently moved item more closer to the storefront versus having it at the back, the frequent items at the back. The system, the processing system, internal processing system, allowed for fatigue and that sort of thing of your employees and so on. So you want to ensure that the warehouse is laid out, demand for your products, or your most selling products. You want to make sure that those products are more or less in front versus all over the place or scattered throughout the warehouse or the storefront, as it were. Yeah, we're looking at the bin labeling and so on. Labeling processes within the warehouse or store or inventory parts are located. This is called the bin location, right? All warehouse and stores implemented the best labeling system. Mr. Bishop? Yeah. Every possession, every physical, every position in the layout in any warehouse is assigned a particular shelf using an ABC methodology, also rows and columns, right? It identify the position of the layout, it actually set and assign the bin location at each time, and having a logical sequential area of identifying zones within the warehouse. It allows for efficient and effective tracking of it. This is particularly important for if you inventory count mechanisms and so on. You will know where item is located in your point of sale system. You'll actually have that tracking item. So if, for example, how we have the picture here, A, B, A2, level D, position 2. And you also have the barcode here. Once you scan it, it will read into the point of sale system, and it allows you to actually know where that actual part item is listed once you have an effective labeling system in place. Yeah. So to implement a successful inventory system that you know exactly where the item is located, you can actually do blind spot checks and so on. Actually go to the shelf and say this item here is scan it, and you go back to the point of sale system. You should that label in there. Implementing an effective labeling system is important for the success. Yeah, as we spoke about the labeling. We also speak about the barcoding aspects by extension. Right, manual LTDCs in the point of sale system can be tedious, especially in the retail business. For example, the hardware that the young lady spoke about earlier on, which are a lot of DLCs and so on. Having a barcoding system would alleviate the tedious task of manually tracking those items of inventory, because once you actually use the scan, you would actually know which shelf location that particular item is located at the storefront, manage your inventory proper. Scanning the proper in the sales inventory automatically, the barcode station speedy checking process, the checkout process, and also to use that a tool to generate and build the barcoding system. So the point of sale system, having an effective point of sale system can also assist you with the barcoding element here. Yeah. The other area of successful inventory management is the inventory ledger. The inventory, most companies or small and medium-sized companies, they more or less look at the sales ledger, more the manual process. They may track the inventory in a spreadsheet or even in a physical book and so on. Yeah, but more and more the advent of technology and that sort of thing. Most of these tasks are more or less within accounting packages, within system inventory management systems. And some of the key areas or some of the key elements of our inventory tracking ledger software should give you basic information as it pertains to your inventory. Yeah. So for example, it will give you the date of the sale, days of the sale of the purchase. It will also give you the transaction detail, the unit price, the actual amount to be paid, the actual or total price paid, and so forth. Why this information is important. As an entrepreneur or as a business person, you need to understand how much you pay for a price, and what is uniquely different with the inventory. Most of the inventory ledgers, the prices will change over time, and within this inventory system, it will give you average prices and so on. So over time, once you purchase, for example, if you purchase that product for $40 today, you pay, and tomorrow you pay $50, the system automatically use an average price to actually give you a cost of sale element within the system. If you use a manual system, you more or less you will more or less use the higher price, the last price, as a cost price within the financial system, which will more or less screw the financial reporting system. So having a system inventory management system, it helps you control the cost and accurate costing of a inventory. Yeah. We also go to the point of sale system. Yeah, as it pertains to the management. Point of sale system, like Venn inventory system, it helps you. It's a good system. It plugs in, as I mentioned, to the barcoding system, the accounting system. It also makes the inventory process much easier. Yeah. A good point of sale system actually helps you track your inventory in real time. The price, we also look at the data, the sales, the customer information, the barcode, the average price, the average movement price, as we mentioned, the customer information, and so on. So at this point in time, this point of sale system, we need to look at the controls that will be put in place, adequate controls in terms of management controls, ensuring that the same person who is actually buying the product is the same person who is actually loading those products in within the inventory system, because that person could be overriding prices and that sort of thing to the best interest and that sort of thing. So at this point, the segregation of duties as it pertains to that aspect is more or less important. Yeah. I just realized that the survey results, 65% of the audience this afternoon, they don't really have a manual. They have a manual system and not a computer-based system for tracking inventory. At this point, I would more or less recommend using a point of sale system such as Venn to actually manage your inventory as a basic. Their program more or less, their programs on a monthly basis might run you about $30 or so US per month. It's a small investment, but it is a monstrous achievement in terms of having your control mechanisms within your company actually moving forward. Yeah. We will also look at the first in, first out methodology. This is particularly important. Most companies will more or less implement this, but I need to mention it because having not mentioned it, you'll come to a point whereby you actually in obsolete inventory within your stores that you have no use to it. For example,
I think we may have lost.
at 2010, 1.3 million Walkman in their inventory. What would happen? That inventory moved from 200 million of sale value versus, and the next day it will $3 or $2 or maybe junk because nobody want to buy a Walkman, right? And I'm not certain if today you might get a Walkman as a souvenir price, but in 2010 the Walkman wouldn't be at that point in price. So you want to make sure that the first in first out method will more or less will tell you leave the oldest stock is sold first, and the newer stock is sold afterwards. Some local companies actually track this through actual storage in batches, such as import, with the import documents and so on. They look at the shipment and the custom codes and so on to make sure that those items that are shipped in last are the ones that actually sold last, as it were. So you look at tracking them in that area. Yeah. We also look at the second area, which is deciding when to order. Deciding when to order is critical of importance for inventory managers. Having an accurate inventory tracking or internal control system and keeping a close eye on the inventory is important. to prevent dead inventory. And what is dead inventory? That is inventory that is kept in the warehouse for 24 months or so, or having market obsolescence, as I mentioned before, the Walkman, right? It hasn't moved anywhere, also 12 months, right? So it becomes market obsolete. Something that may come market obsolete with the dynamic change in technologies and so on. The Apple iPod, you can say, may have become obsolete because everyone is using their phones and so on for using the same, listening to music and that sort of thing. Yeah. So you want to make sure you want to use a series of things. But if you're in a position of inventory management and so on, and you're looking for ways, faster ways to get rid of the inventory and so on, you can consider looking at flash sales, daily, weekly, wow deals and so on, to really bring down the inventory values and so on. So let's look at a few techniques that is used to actually manage the inventory, or making deciding what to order more. We look at the setting up the ordering process, also setting up a successful order process. We'll first look at reviewing the historical sales. We also look at prioritizing your inventory and also using purchase orders. Believe it or not, some clients come across, they don't use purchase orders. So most of the companies will more or less drop items by them and leave a bill for them to pay. The sales teams on their side, they boosting their sales, but at the same time, your financial systems are being affected by it. Yeah. So let's look at what area setting up a good system will cover. Yeah. Analyzing the sales pattern or trying to predict changes of demand is a simple way of avoiding inventory purchases. It looks at data of inventory software and so on. If you don't have inventory software, you can't look at any data. You will be blind in your process. Yeah. So you want to make sure that you have an effective system, so you know what is the busiest week of the year. What day of the week is January? You will generally run out of top items. Yeah. You'll generally run out of items, or seasonal highs or seasonal lows in the quarter. For example, we'll see, look, the wow deal here. Of course, we'll normally run a wow deal on a monthly basis. They will run a weekly, a daily sales systems, right? They more or less use 99. Everything on the sales areas would have 99 at the end, so it will attract the customers and so on. They would actually track. They would actually implement key catalogs and so on. In terms of the Diwali system or the Christmas sales specials and so on, they will definitely do those campaigns as a area to actually identify those items. Yeah. Also setting up par levels, understanding what are the areas in the inventory system that you need to, at which point you need to reorder. For example, if you sell 50, 100, if you have 100, if you always have 100 products and you know at the end of the month you normally remain with 2 or 3 or 4, you need to set up par level. So you say, listen, every month I need to ensure that I have 100 of those items in stock. So if at the end of the month, at the 15th of the month, you know you're going to run out of that product, so you want to put an ad for maybe 50 or 50 more items. So every point in time, you would have a consistent flow of inventory product within your system. A computerized system would allow you to track those items on a holistic basis. Yeah. Again, external factors would have a whole lot to do with it, into the setting up historical trends, or looking at historical trends and setting up par levels, because as we can appreciate, the coronavirus would have thrown every analysis that one would have through the door, right? Because for non-essential businesses, demand will fall to the ground. For essential services, demand will fly through the roof. Some services you might can't even, some services they can't even meet, some demands they can't meet for the high demand items, and you know the non-essentials, they can't meet, they can't sell anything whatsoever. So the demand more or less falls. The obsolescence, the sales trend will be skewed based on the cyclical aspect of COVID-19. Yeah. We're looking at prioritization of stock. This is particularly important in managing inventory. When you prioritize your stock, you're looking at high margin products with unprecedented sales, low margin products with high frequency sales. How do you target those things? How do you identify your products? Some of your products may have high margins but low sales. It may have low margins with high frequency sales. So let me bring it back to the example I would have the case study. Courts do something called range planning. It means that the lower end products that more or less sells quickly, they will go in the Lucky Dollar brand, versus the higher end product may go to the warehouse, the courts mega store and that sort of thing. That's so they could actually sell those products much faster. And they also zone the products and themselves into hotspots within the stores as well. And what is a hotspot? That is the spot in the store that actually has the most traffic inside the store. Meaning they will more or less prioritize those items of inventory to be sold as fast as possible. So for example, if you have a product that is struggling to be sold, you would actually put it in the hotspot in the store where you have the most high traffic coming into the store. Yeah. You also want to look at, if you're prioritizing, you want to look at something called a footfall, meaning everybody that walks in the door, that you actually compare your sales versus how many persons that walk in your store. You want to do a percentage on that sort of thing. Technology can assist you with that, to assist you in terms of prioritizing what stock items you want to sell fast as possible, and also you want to actually get off your hands, as it will. Yeah. So the other item, as I mentioned before, in terms of management of the inventory, would be the purchase order aspect. All businesses should use purchase orders. Small businesses may not use purchase orders at the start, but as the business becomes more complex, right? You want to more or less use the purchase order system to ensure that your budget are adhered to and those items are fulfilled properly and so on. It should ensure that you and the suppliers are on the same page. What does that mean? A supplier just can't come and say, listen, I'm coming to drop 10 cases of beer for Robbly Beans today. We're going to sell those items. We don't have a demand for the item. We never ask, we never order those items. But because of the good relationship and so on, and they have quotas to meet, they might come and drop 20 cases to me. And then leave me to look for the sale for that. But that comes at a risk to us as well from a tax planning perspective. And let me tell you why. We would have dealt with VAT during the last session last week. And if you see a company, sometimes you might say, yes, I'm getting a VAT refund, and having a VAT refund is nice. But having a VAT refund is not nice. It means if you're an inventory business, having a VAT refund, it means that you're paying for a lot of goods that you're not selling. Because obviously you're buying the goods, you're paying the cost, but your revenue end of it is smaller. Having a good balance between your sales structure and your purchasing structure is critical of importance. So if you see a business, and if you are a business that consistently having VAT return or VAT refunds, you need to really look at the balance between your purchasing and your sales aspect. You also want to look at the prioritizing of the inventory. Also look at the par levels to make sure that you keep a minimum inventory balances within your system. And that's just linking your purchasing aspects to your tax planning and tax management aspects of your business. Yeah, we want to look at the other aspects in the lens that we looked at. First, we looked at the actual tracking. We looked at the tracking aspects of it. We look at the ordering aspects of it. We know what the minimizing cost aspects of it. Yes, we might say this is something that is ingenious to us, but trust and believe me, some businesses may not have the technique or may say that, listen, supply is a critical supply of mine, and they might want to renegotiate their prices and so on over time because they get comfortable with you. They may give a lower price at the first instance when you buy the first batch of inventory, but over time they will raise the prices on you. So as a effective business owner or director of a company, having good control over the management of your costs associated with purchasing is critical and important. So let's dive into that at this point. Yeah. So to minimize costs, successful inventory management, getting better prices from the suppliers. Prices vary over time, as I mentioned to you, and then to ensure that the profit margin remain consistent. Developing a good relationship with the suppliers is important, right? I mentioned what you may consider to implement perhaps a three-quote process whereby you have three suppliers and you take in quotes of each one of them, and who has the lowest price for that item, you more or less want to purchase from that supplier. So that in that rate, you reduce the risk of just buying from one person initially, right? Because they had the lowest price, but over time, because they understand that you consistently buy, your eyes become blind to the prices over time. Yeah. You also look at bulk purchasing and so on, because if you're buying bulk majority of the time, you will get a deeper discount and so on of your product and services. So you want to consider the option between buying individually or even buying in bulk. For example, if you normally buy 2 cases, if you buy 10 cases, you might get 1 free. So that's a whole case that you will get additional sales from and also benefit from the lower prices. Yeah. In Trinidad, when I was working for one of the local hotels, if you buy 10 cases of water, you'll get 2 cases of water free. It means that we could have serviced 48 more clients with that one purchase versus just buying those 10 cases. Yeah. So you want to look at those bargains or those discounts by just establishing good relationship with your with the suppliers, you know, and also looking at having them compete with each other, because at the end of the day, you have the purchasing power to actually demand better prices and that sort of thing. Yeah. So we like to look at the auditing control area. Audit is one of the major aspect of inventory control. If you don't measure it, you don't achieve it, right? If you don't count it, it's not there. Yeah. What is a stock count? The physical count. The stock count are done blind, are performed blind, and this means that they count it prior to checking it in the point of sale system. Most people at the end of the year, they might just print the count sheet. They have all the numbers on it. The counters will just walk through the warehouse, and if they see 10 items on the list, they're looking for 10 items. But it may have 13 items. But when they reach the 10, they done the count, and it's through the count sheet, the physical count and so on. So implementing an effective counting system, you need to ensure that those count sheets are done via zero. You take out all the numbers within the count sheets and you allow the count teams to actually walk through the warehouse and actually physically count those items, right? At a minimum, it must be performed on an annual basis and is tracked in the inventory management system or in the point of sale system. The physical count is a process periodically auditing all inventory assigned by the financial entity, right? Best practice at this point normally use something called a RFID scanner system that actually scans those items from the warehouse, and it actually picked up any point of sale system to actually show the quantities and so on that is actually there. So you don't have to actually work with a physical count sheet as it will actually count it. Just use a RFID scanner, barcode scanner, and just scanning each and every product within the warehouse, and it should update the inventory system. Yeah, most point of sale system has that capability. So looking at a point of sale system that actually supports that level of counting will greatly impact on you on that. Yeah, setting up accounting process for success. We look at three major elements. One is the end of year physical inventory count. We also look at cycle counts, that is look at the category of your inventory. Best practice looked at the ABC methodology. A, so the high value item. B, mid value items. C, low end value items. So to select, you want to select the higher value items and count those items more regularly. So if it miss within the warehouse or miss within the system, you more or less capture your revenue items, because at the end of the day, inventory is like cash within your business. After you spend money, that is cash sitting down within your business. And we also look at the spot checks and so on that we would have mentioned before preliminarily. Yeah. A full inventory year-end count, it involves actually counting all the entire inventory system, all the inventory items, all the shelves or the warehouse, the full inventory system. Yeah, this should be done well ahead of the time that the system actually closes, and it will be a lower period within your company. For example, some people like to count on the last day of the year, earliest day, right? I particularly don't like last end date counts because it's a festive period. Most of the people come to the warehouse, they may come intoxicated. Some of the team members decide they need line to go by, they might have count the shelves and that sort of thing, right? So I prefer a count. So it will ensure that once you do a cycle count throughout the year, you will cover all the classes of inventory throughout the year, so you don't force yourself to do a whole year count within the end of the year, and then someone has to reconcile the entire. Well, I just saw the results on how often you count physical count. The highest is 38% would have said monthly, followed by annual counts, right? 29% semi-annually, but best practice.
Well, I think we're having some internet challenges. Natalie, do you want to check in with him quickly?
Sure.
Just give us a few moments. Please bear with us.
Hello?
Hey, welcome back.
Yeah, I think we got cut off a while ago. Yeah? So we look at the cycle counts, and here instead of doing the audit at one go at the end of the year, we want to spread it throughout the course of the year. Yeah. For example, a boutique might want to order the shoes once a month, and then they do the shirts next, and the cycle, and using the cycle count methodology as I mentioned. The process where it's based on EBC stratification, the contents tells you to ensure that A items are counted 4 times in the year, B items 2 times in the year, C items 1 for the year. The cycle count is performed on minimum, weekly, and so on. Having a good system internal control and a level of segregation and duties, you can actually assign different members of your team to actually count those high value items, be it value items, and so on. So you don't stress yourself at the end of the year. You'll be able to get good integrity in terms of your inventory system, and also it assists the end of the year to a financial result, because if you can show evidence that the inventory is counted holistically throughout the course of the year, the end of the year count, which is considered mandatory by financial accountants and that sort of thing, it will more or less be other cycle count that more or less it will come like a spot check versus a holistical check that brings a lot of anxiety with the business owner and that sort of thing, because they had to bring out a team of 30, 40 staff members. They had to feed them. Some people have looking at party and that sort of thing. And also the reconciliation aspect. The reconciliation aspect of it will take a long time to reconcile. And even though you have validations and so on, you have a lot of problems actually bringing that actual inventory count to where it ought to be absolutely, right? So that you have the system in place for that, yeah? So cycle counts are the recommended count for effectively running an inventory management system within your company, yeah? And we also look at the spot checks. This should be the favorite of the directors. This is one of my favorites. Having an inventory business, you want to make sure that you do these spot checks, because it helps you to identify whether or not purchasing is doing their job. Meaning after they purchase the items, they actually stock it on the shelves, is actually updated in the inventory system correctly. It also helps you identify whether or not there's particular fraud or error within the system as it pertains to people actually removing items from the inventory system and that sort of thing. Is very good. The team tonight is actually stating that 70% of the team tonight actually stating that they are interested in implementing a cycle count system within the business, and that is very commendable. Yeah. So going back to the spot check from a director's perspective, you want to ensure that integrity is there within your system. Because I will give you an example. I once worked at a hardware. This hardware had stepping stones, maybe thousands of stepping stones and so on. They did perpetual counts and so on, so they had a good idea of what amount of stepping stones that they had at that point in time. They had a cashier who worked at the credit at the hardware. She will actually when the customer comes to the return the stepping stone for where even it may be broken and that sort of thing, she credit the bill, right, in the system. She credit the refund the bill, right, give the customer new stepping stones, right, but take the cash for that actual sale. So when they're looking for those stepping stones gone, but you have a refund in the system. And that happened to many invoices. So realize that she avoided invoices in the system, but the physical inventory on hand was not there. But because the perpetual systems was done, and the supervisors used to do spot checks. That was picked up immediately. Yeah. So
Right, so give us a few seconds. It seems that his internet went down again, but I'm sure that he will be jumping back on shortly. So let's just give him a few minutes. I think he's back. You're back?
hi.
Okay, good.
Yes. Yeah, the internet. So I was just explaining. We want to ensure that the top level staff will do the spot checks. The middle level staff will normally do the routine, the cycle accounts, and so on. We would have a schedule for those things: high level, mid level, and also the lower level inventory, right? Based on the pricing and so on, right? And also the end of year count. We would do a blend of that count to ensure that the amendments of the end of year count are adhered to and so on. Yeah. Coming more or less coming to the end of the and as I mentioned to you guys, we'll now look at the financial matters that it pertains to the inventory, where the inventory is located, when it's actually purchased, and so on. To easily do this, express this or discuss this area, I take that perspective from a flow chart perspective. Yeah. So we look at the inventory life cycle. We start by you buy the inventory. If the inventory is sold immediately, that inventory is recorded as a sale, and the cost of purchase posted to the and posted the sales in the cost, and it posted into cost of sales. Yeah. If it's not sold immediately, that aspect is sold, goes into the inventory and is tracked within the inventory under current asset. As I mentioned before, current assets looks at how liquid the items within your balance sheet could be sold. So you go the stock, debtors, which is people actually have money for you, bank and cash, right? So inventory is one of the less illiquid asset, but is also a cash equivalent aspect of your business, and that should be managed just like cash. Yeah. So if the inventory remain within your system for 24 months, so you more or less become a dead inventory or junk inventory, obsolescence provision should be provided within your financial system. This obsolescence provision is based on the policies and procedures as it pertains to the bylaws of a company. If you know, for example, if you have a printing business and you're selling computer units, you said like 10% obsolescence was taken on those inventory over time, because that will consider the fall of value of those computer units because of changes in technologies and that sort of thing. For example, the iPhone 12 may have came out, so which means the iPhone 11 before the 12 came out were like 2,000 US, right? When the iPhone 12 came out, it dropped drastically to 1,100 US. So it means that had the organization understand the dynamics of issuing a new version of that product, the obsolescence provision should more or less be provided for 30% of the actual cost of the inventory. This provision is taken into the statement of financial position, and it obviously would adhere to the inventory recognition criteria as the lower cost and net realizable value. And it means that that is how much that the market will pay at an arm's length transaction, and you look at the NRV, the net realizable value. At that point in time, you select the net realizable value because the market will tell you what the price that they will accept for that particular product. Yeah. The other thing that needs to be mentioned at this point, after putting in a obsolescence provision within your business, that would have a taxable implication. It gives rise to a deferred tax asset or a deferred tax liability, as it will once you actually release it, and that is actually used in computation under your tax returns and so on. All right. So having an inventory system actually being managed and with great integrity and with great control, you should have some level of obsolescence, meaning inventory that you may have 24 months and over. That value has changed over time, and would not fall in line with the inventory recognition criteria. So a financial professional needs to look at those inventory and measure it based on the inventory system, or in line with inventory recognition system, or in line with the company's inventory process. Setting up an effective inventory process is critical, so you will know exactly, based on the industry that you actually run, or you live in, or you're working, you will actually know how to run that. I'm available for questions. I think we reached the end of the presentation. Team were really quiet tonight. I don't know, Natalia, you guys had some questions that I would have missed?
So we actually had some questions with regard to the Vend platform that you had spoken about earlier. But
yes.
I think Mikhail had answered it in the chat. But if you like, you could just reiterate that information just for the benefit of the rest of the group.
Okay. So the Vend point of sale system is actually designed for at least 20 industry sectors. It helps you. It also helps with the point of sale, the barcoding system, and also help you to do the back office aspects of it. And it takes into consideration your custom costs, custom duties, and that sort of thing. It also helps you with the barcoding, labeling, and referencing of your warehouse and so on. So that system itself, it runs like for $30 US or so per month. It's on a subscription. It's a subscription base. Some people use a off-the-shelf system. So if technology changes over time, you won't get the benefit of it. So most of the leading companies will offer that subscription and that sort of thing. So if it change or any updates or so on, or in support, you get it readily available. For a small and medium-sized company, you don't want to have a bespoke system that somebody decide to tweak something for you, because every 2 minutes you're going to ask them to tweak something for you. You want to get an international brand that you can actually get the international support 24 hours and that sort of thing. So don't think cheaply as the cost associated with the actual the software. You want to think about transferring that cost to the customer through your product and your services, and you get the top level or top brand to actually assist you with that management of your inventory. Yeah. Few people, when you're running business, you might say, well, listen, if I buy it one time, I don't want to think about it in the future. But something, you get a man to come into you and you might charge you $10,000. And because it affects your production, they will actually take you for $6,000, right? And it'll cost you more in the long run. So try to research the point of sale systems and so on, and get something that will suit your organization and so on. But I would recommend Vend or Square, right? Most companies are using the Vend product. Yeah.
Okay, great. And I saw Mark actually asked if anyone could recommend a software that does inventory management as well as the accounts. So I suppose the Vend platform, the point of sale system, would filter into like the Zero platform.
That is correct. They are both they are integrated. So it's a feed forward system. So once the inventory is actually tracked in the financial system, if you post a purchase order, the purchase order will remain in the accounting system. Once it's received in the accounting system, it's actually pushed forward in the point of sale system So when the items are actually sold, is more or less updated real time, from real time. Yeah. And that's bit of having systems that actually integrate with each other. Yeah.
Nice. I think the chat was actually very, very busy tonight, so I'm not sure, Denise, if I'm missing any other questions.
No, I don't think so. Most of it was regarding the question that you asked and exchanging information. But if you have any questions that you didn't put in the chat, now is the perfect opportunity to ask. So does anyone have any question that they want to go ahead and ask quickly before we go?
This is Mr. Beansy. I just want to give some insights based on dealing with businesses, small, medium, and large. Small businesses, they tend to adopt the manual processing of their inventory. And especially being an inventory-based business, it's critical that you track your inventory. As Kenneth said during his presentation, your inventory is your money. So you don't want to be lackadaisical with your inventory. You ain't just go and burn physical dollars. And how some small business manage their inventories, like they're burning money because they tend not to do we'll call it stock counts. They tend to put too much confidence or not enough segregation of duties with their employees. So theft and fraud could be easily done inside their business. So when you have an inventory business, is so much more critical than managing a service-based business. And the banks and they would know that in terms of the risk aspect of things. So as Kendall said, try to move away from manual inventory matters, invest in a point-of-sale system, do periodical checks, spot checks, monthly inventory counts, because again, that's where your money is. And also as well, where there's concern with insurance, a lot of even large businesses, they might have insurance value of 2 million, but they're stocking in their warehouse 4 million. So in case of a fire, the insurance company could probably give you 1.5 million and you just lost 4 million. So hence, having an accurate inventory management system is critical for your business.
So you can actually monitor that the price. So you can monitor the coverage, insurance coverage over time. Yeah, because some people don't actually know the value of the inventory. Because if you have people just come and drop in products by them, they don't know, right? I didn't touch on receiving, the receiving of the inventory, inspecting the inventory, storing it, and so on. Within this presentation, and I think that's the other element that you want to consider when the inventory actually comes into your warehouse. You have a clear space, clean and clear, that no inventory is stored there. You are receiving bay, so the inventory is dropped there. The team actually use the purchase order sheet and actually pick it and check every single thing off to ensure that the quality and so on is there. If they have items that have poor qualities and so on, you want to contact the customer or the supplier immediately and request a credit note for those items, or send back those items immediately and so on. Because a lot of companies, small companies, they get poor quality and they actually keep the cost within the company, right? We want to ensure that you have a system to actually track those things, actually send it back to your customers immediately. You don't want to mix products coming in and products things, so products that are actually already in the business, because why? Start to commingle the inventory, and then after you will lose track of what you had in store and what actually comes within your system, right? I didn't deal with that aspect of things because there's certain policies, processes, approval channels, and that sort of thing that needs to get inside of there. But again, just having a clean and clear receiving bay, so when the items come, you can actually take it. And then from whenever they actually received, the team actually who's packing all those items and so on, to ensure that those inventory is updated into the point of sale system. So the inventory system is updated with those new items once it come into the warehouse and so on, after being validated and so on. Yeah.
Kenel, I have a question for you in terms of inventory, and you raised a really good point about managing your supplier relationships and investigating and looking at the kind of inventory that you have coming in. How important would you say? Sorry.
Someone. Yeah.
Yeah. Okay. How important would you say having like proper contracts, supplier contracts in place as an SME? Would you recommend that's something that
a business is built on contracts, right?
Yeah.
What we do, contracts is important. So I would recommend businesses to go into contracts, but you need to understand based on the type of industry, because for example, a contract in the wheat industry may be disadvantageous to the company themselves, but seller, because if the price of wheat go up and down, it all depends on the contract you get locked into. Price goes up, right? And you have a low price, it'll be beneficial to you.
Right.
It means that you have to pay that high price for the particular item, right? So it based on the industry that you're actually involved in. And two, as I mentioned before, a 3-quote system allows you to manage your supplies and so on, right? So you get the best price all the time. Because if you just go and buy one person all the time, over time price will go up and you will be none the wiser, right? But having 3 suppliers for a particular product or good or service, you actually will get the best price most of the time, right? Some companies over time maybe have some segmented divisions of the business supporting the other, and they might just send you a price for that, but the division might charge you more than the outside of the company and so on. And that's what most large companies will suffer from, that inside paralysis, as it will. Right? So we want to look at perhaps instead of going into contract, perhaps get a price list from them and hold them to the price book. Right? If you price book, then you know, okay, listen, you don't need to send 3 quotes all the time because you have a price book from 3 customers. And based on this price book might last to maybe 1 year worth of prices. So if you're going into contracts, perhaps demand a price book from them, that the price book is fixed in a period of time that you could actually use to forecast the budgetary reallocations and so on. Right?
Great.
3 elements: price book, second one, 3 quotes maintenance system, or if you could put them under contract, if you know definitely you get any margins and you have a contract for a 3-year period, I want to lock you in with one price because I know my profitability over time will cover any cost that I would incur. Right?
Gotcha. Thank you. We actually have one question.
Okay.
Siljan is asking, how do you manage inventory in a quick turnover industry such as a cafe?
Okay. Well, a cafe, most of the products actually buy and actually sold. So the inventory mechanism system would just be the quality control aspects of things. It wouldn't be on a price aspects of things because the margins in a cafe is really high, right? So you want to make sure that the products are kept in a clean, safe environment, controlled environment that they actually can be best to be sold to the customers when they actually needs it. Yeah, and you don't run the risk of the item spoiling and that sort of thing before it actually sold. Yeah, so that's the major control mechanism for a cafe versus other businesses that will more or less hold non-perishable products or so. Yeah.
Any other questions, guys? No, you have an expert right here. Make sure that you take advantage of the opportunity. Is there anything else that you'd like to know about making sure that your inventory management system is up to standard? No, well, if it is that you have any questions after, please feel free to email it to me, email it to Natalia. Robbie has also included his contact information in the chat, so you can also contact them. They're one of our partners. I think, did I just see a question? No. Okay. So next week, well, week after next week, which is going to be December 1st, our topic is going to be fixed assets for SMEs. So if you have not already registered, I'm going to encourage you to make sure that you register so that you will not miss out on how to deal with your fixed asset. I would also love to use the opportunity to invite you to another very important JMMB session that is happening tonight. We are having our Go Getter Live webinar for JMMB SME clients. So JMMB has a Go Getter Live webinar that happens every Tuesday and every Thursday at 8:30 p.m. You can watch it on YouTube or Twitter. I include the YouTube link in the chat room. So you can use that link to watch tonight's feature. We're going to be featuring a few of our SME clients that we have been working with to grow their business. So please, I encourage you to go and watch it. It should be starting shortly at 8:30 so that you can support our SMEs and see what opportunities exist for you and your business as well. So that is it for tonight. Thank you so much for coming. And we are looking forward to seeing you at 8:30 and next week not next week, week after, December 1st at our next workshop. So enjoy the rest of your night, everyone.
Good night, good night.
Thanks, Kendall.
I think that's just us.
Mm-hmm.
Oh, Shani gone.
Yeah.
We don't need to stay on. We're going over to the live session.
Yeah.
Well, we have some time. It's 8:30 to start.
Okay.
Bye, guys. I'm going to go and bite my nails for my clients.
Oh God, no, don't do that. They'll be fine.
They're gonna be fine.
Yeah. All right, bye later.
Bye.
Bye.